Look, if you've been stacking gold and silver while everyone else is chasing the latest crypto pump or dumping money into overvalued tech stocks, you already know what I'm about to say. You've felt it. That quiet confidence mixed with frustration because nobody around you gets it. Your friends think you're paranoid. Your family thinks you're stuck in the past. Financial advisors roll their eyes when you mention precious metals. But here's what they don't understand, what they can't see. You're not just buying shiny metal. You're positioning yourself for the greatest wealth transfer in modern history. And the fact that you're underestimated, that's your advantage. Let me paint you a picture of what's really happening right now. While mainstream media talks about inflation cooling and the economy stabilizing, there's a completely different story unfolding behind the scenes. Central banks around the world are buying gold at a pace we haven't seen in decades. Not just buying it, hoarding it. The People's Bank of China added to their reserves for the 18th consecutive month. Poland just announced another massive purchase. Singapore, Turkey, India. The list goes on. These aren't amateur investors making emotional decisions. These are the most sophisticated financial institutions on the planet, run by people with access to information you and I will never see. And they're all doing the same thing, accumulating physical gold as fast as they can get their hands on it. Now ask yourself, why would they do that if everything is fine? Why would central banks, the very institutions that print fiat currency, be desperately exchanging that currency for gold? It's like the captain of the Titanic quietly putting on a life jacket while telling passengers everything is under control. But here's where it gets interesting. While institutions are stacking, retail investors are largely ignoring precious metals. Gold and silver are barely mentioned in investment circles. Everyone's focused on AI stocks, real estate, bonds. The average person has zero exposure to physical metals. Zero. That's the setup. That's why you're underestimated. Because you see what's coming and you've already positioned yourself. Let me take you back to a moment in history that most people have forgotten. August 15th, 1971. President Nixon closes the gold window, ends the convertibility of dollars to gold. Most Americans didn't understand what happened. It seemed like a technical policy change, nothing to worry about. But a small group of people understood immediately. They knew that once the dollar was completely untethered from gold, once there was no limit to how much currency could be created, the game had fundamentally changed. Those people started stacking, quietly, consistently, while everyone else went about their business. What happened next? Gold went from $35 an ounce to over $800 by 1980, a 23 times increase. The people who understood what was happening, who positioned themselves early, who were probably called crazy by their friends and family, they didn't just preserve their wealth. They multiplied it beyond anything the stock market could have delivered during that period. Here's what nobody tells you about that era. It wasn't a smooth ride up. There were pullbacks, moments of doubt, times when it seemed like maybe the skeptics were right. But the people who understood the fundamentals, who knew that the monetary system had fundamentally changed, they held on. They kept stacking, and they were rewarded beyond their wildest expectations. We're in a similar moment right now. Actually, it's worse, because in 1971, the U.S. was still a creditor nation. We still had manufacturing. We still had a trade surplus. The dollar was still respected globally even after the gold window closed. Today, we're running trillion-dollar deficits that nobody even blinks at anymore. The numbers are so large they've lost all meaning. We're printing money to pay interest on money we already printed. It's a debt spiral that has only one possible ending. And yet, most people are completely oblivious. But you're not. You've done the research. You understand that every fiat currency in history has eventually failed. Not some of them. All of them. The average lifespan of a fiat currency is around 27 years. The dollar has been fully fiat since 1971. Do the math. Now, I want to talk about something that doesn't get nearly enough attention. The physical market versus the paper market. Most people who think they own gold actually own paper promises, ETFs, futures contracts, allocated accounts that may or may not have actual metal backing them. The COMEX, the major exchange where gold and silver futures trade, operates on a fractional reserve system. For every ounce of physical metal in their vaults, there are dozens of paper claims on that same ounce. It's the same game the banks play with your deposits. Works great until everyone wants their metal at the same time. And that's exactly what's starting to happen. Physical demand is overwhelming supply. Refineries are running at full capacity. Premiums on physical metal are rising. Delivery times are extending. The spread between paper prices and physical prices is widening. What happens when that system breaks? When the paper market, which has been suppressing prices for years through unlimited paper selling, finally disconnects from physical reality. We're about to find out. Here's a story that illustrates this perfectly. A few years ago, a major German bank tried to repatriate their gold from the Federal Reserve in New York. They were told it would take 7 years to return their gold. 7 years. To return gold that was supposedly sitting in a vault with their name on it. Think about that. If you went to your bank and asked for your money, and they said come back in 7 years, what would that tell you? It would tell you the money isn't there. It's been lent out, rehypothecated, used as collateral for other transactions. The same thing is happening with gold. But when you're holding physical metal in your possession, you're outside that system. You're not dependent on promises. You're not exposed to counterparty risk. You actually own something real. Something that's been money for 5,000 years. Something that can't be printed, can't be debased, can't be created out of thin air. That's power. Real power. And the people who don't understand precious metals, they don't understand that power. They think you're just buying a commodity. They don't realize you're buying insurance against the entire financial system. Now, let me address something important. If you're sitting on a significant retirement account, 6 figures or more, and you're concerned about what we're discussing, there's a strategy worth understanding. Gold IRAs allow you to hold physical, precious metals inside a tax-advantaged retirement account. It's a way to get real assets protecting your retirement without triggering tax consequences. I put together a detailed guide on how this works, the rules, the custodians, the whole process. It's in the description below. No cost, just information. If you're in that situation where you've got substantial retirement savings and you want to understand your options for protecting it with physical metals, check it out. Could be relevant to your situation. All right, back to what's happening in the markets right now. Because this is where it gets really interesting. Silver is setting up for something extraordinary. The gold-to-silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, has been historically out of whack. Right now it's hovering around 80-1. Historically, that ratio has been much lower, 15-1, 20-1. But here's what makes silver unique. It's not just a monetary metal, it's an industrial metal. And the industrial demand is exploding. Solar panels, electric vehicles, 5G infrastructure, medical applications. Silver is being consumed in ways that gold never is. Once it's used industrially, it's gone. Not economically recoverable. Meanwhile, silver mining production has been flat to declining. We're not discovering new major silver deposits. The easy silver has been mined. What's left is lower grade, more expensive to extract. So you have declining supply meeting exploding demand, and on top of that, you have the monetary demand. People waking up to the same things you already understand. Wanting to hold real money, wanting to protect themselves. The setup is incredible, and yet, silver is still trading at prices that are, in inflation-adjusted terms, well below the highs from decades ago. It's one of the few assets that hasn't participated in the everything bubble. That's not going to last. When silver moves, it moves violently. In 2011, it went from $18 to nearly $50 in a matter of months. That wasn't because of some fundamental change. That was just a taste of what happens when physical demand overwhelms the paper market. Imagine what happens when we get a real monetary crisis. When people lose faith in the currency. When they rush to convert their paper wealth into real assets. Silver, with its smaller market size, is going to move in ways that will seem impossible to people who don't understand the dynamics, and you'll be sitting there, with your stack, watching it happen. While everyone else is panicking, trying to figure out what to do, you'll already be positioned. That's the advantage of being early, of being underestimated. Let me tell you about the psychology of this, because it's important. When you're stacking metals while everyone around you is doing something else, it's lonely. You start to question yourself. Maybe they're right. Maybe I'm missing out. Maybe I should be in stocks or crypto or real estate. That doubt is natural, but it's also dangerous. Because the moment you give in to that doubt, the moment you abandon your position because you're tired of being the contrarian, that's usually right before everything you believed in gets validated. I've seen it happen over and over. People who stacked for years, who understood the fundamentals, who had conviction, they get worn down by the skepticism around them. They sell their position. They move into whatever's hot. And then, 6 months later, the metals take off and they're left watching from the sidelines, kicking themselves. Don't be that person. If you've done the research, if you understand why you're holding metals, if the fundamentals make sense to you, then trust that. Trust yourself. The crowd is usually wrong at major turning points. That's not arrogance. That's just historical fact. Think about every major market move in history. The people who made life-changing wealth weren't following the crowd. They were positioned opposite the crowd. They were buying when everyone else was selling. They were holding when everyone else was panicking. You're in that position right now. You're holding real assets in a world drowning in paper promises. You're positioned for a monetary reset that most people don't even know is coming. You're underestimated because people don't understand what you understand. But here's the thing. You don't need them to understand. You don't need validation. You just need to be right. And if you're right about the direction of the monetary system, if you're right about the value of hard assets in a world of infinite currency creation, then being underestimated is actually perfect because it means you're still early. It means the crowd hasn't figured it out yet. It means there's still time to accumulate, still time to position yourself before the rush. Let me give you another historical example. In the late 1990s, there was a small group of investors who looked at the dot-com bubble and said, "This doesn't make sense." Companies with no revenue trading at billion-dollar valuations. Insanity. So they stayed out. They held cash. They waited. Everyone thought they were idiots, missing the greatest bull market in history, leaving money on the table. But they understood that valuations matter, that fundamentals matter, that eventually reality reasserts itself. When the bubble popped in 2000, those patient investors had dry powder. They had capital to deploy when everything was on sale. They bought quality assets at distressed prices. And they made fortunes over the next decade while everyone else was just trying to recover their losses. That's the power of being positioned correctly, of understanding the cycle, of having the patience and conviction to wait for your thesis to play out. You're in a similar position with precious metals. You're holding real assets while everyone else is chasing paper returns. You're positioned for a monetary crisis while everyone else is assuming the system will continue forever. You're early. You're underestimated. And that's exactly where you want to be. Now, let's talk about what happens next, because this is where it gets really interesting. We're approaching a point where the system has to make a choice. Either they let interest rates rise to combat inflation, which would bankrupt the government, because we can't afford the interest payments on our debt, or they keep rates low and print more money, which accelerates the loss of purchasing power. It's a trap. There's no good option. And the people running the system know it. That's why they're talking about central bank digital currencies. That's why they're talking about yield curve control. That's why they're trying every trick in the book to maintain confidence in the currency. But confidence is a fragile thing. Once it's lost, it's almost impossible to regain. And we're seeing cracks. Countries settling trade in their own currencies instead of dollars. Central banks diversifying away from dollar reserves. The BRICS nations talking about a gold-backed trade currency. These aren't random events. This is the beginning of a major shift in the global monetary system. A shift away from dollar dominance. A shift back toward hard assets. A shift that's going to reshape the financial landscape. And when that shift accelerates, when it becomes obvious to everyone what's happening, the rush into precious metals is going to be unlike anything we've seen before. Because this time, it's not just about inflation. It's about the reserve currency of the world losing its status. It's about a complete restructuring of how global trade and finance work. The people who are positioned ahead of that shift, who saw it coming and acted, they're going to do extraordinarily well. Not because they're smarter than everyone else, but because they were willing to think independently, to question the narrative, to trust their own analysis over the consensus view. That's you. You're that person. You saw something that most people miss. You took action while others were complacent. You built a position while metals were unloved and ignored. Now you just have to hold. Have to maintain your conviction. Have to resist the urge to abandon your position when it feels like nothing's happening. Because something is happening. The pieces are moving into place. The fundamentals are deteriorating. The end game is approaching. And when it arrives, when the monetary system finally breaks under the weight of its own contradictions, you're going to be glad you were underestimated. You're going to be glad you stacked when nobody else was paying attention. You're going to be glad you trusted yourself. Because in the end, that's what this is really about. Not just protecting your wealth, not just making money, but having the courage to think for yourself. to go against the crowd, to position yourself based on your own understanding of reality rather than what everyone else is doing. That takes strength. It takes conviction. It takes a willingness to be wrong in the short term, for the possibility of being spectacularly right in the long term. And if you've been stacking, if you've been building your position despite the skepticism around you, then you already have those qualities. So stay ready, keep stacking, ignore the noise, trust your analysis, and remember that being underestimated is a gift. It means you're still early. It means the opportunity is still there. It means when everyone finally figures out what you already know, you'll be positioned to benefit in ways they can't even imagine. The greatest wealth transfers in history happen when the majority is positioned wrong and a small minority is positioned right. You're in that minority. You've done the work. You've built the position. Now you just have to hold it and let the fundamentals play out. Because they will play out. They always do. And when they do, you'll understand why being underestimated was actually the best thing that could have happened to you.